Hello, everyone. Today, I will be arguing the position of regulating the institutional acquisition of single-family homes as investments. All right, I'm gonna hop right into it. Institutional investors are beginning to realize the opportunity that lies in real estate investing, and they have in the past, but now, especially in times with turmoil, it's become more prevalent. The Economist says real estate investment funds, REITs, private equity firms, insurance companies, and pension funds see the single-family rental housing market as a relatively high-yielding hedge against inflation that has been spared the impact of pandemic-related lockdowns on offices. Housing continues to generate income when offices and shops don't. And in this debate, there are two positions taken by Zonte and Charlie, and I'm trying to act as the middle ground by regulation. So there's the first position to keep institutional investors and continue to allow them to do whatever they want. This would be argued by homeowners, professionals in the industry, and of course the investors looking to make a profit. One, they do this because they want to make a profit and continue making a profit, but also because they believe it's the best thing for our economy. Some points they might bring up are that they have the capital to improve houses and communities, basically gentrifying areas. Another point, anyone can invest in real estate with REITs. Existing homeowners benefit from price inflation due to both gentrification and lack of supply initially. And then lastly, they have the ability to develop more housing with their deep pockets, which essentially they'd own these housing assets. The other position, banning institutional investors completely from purchasing housing, or at least single family homes, would be argued by middle and lower income households because they're left out of the picture. The gentrification of areas currently populated by these groups is pushing them out. The price inflation in the housing market is discouraging them from purchasing housing in the first place. And when they do try to purchase housing, they have to compete against institutional money and often cash offers, which isn't very possible. All this is leading towards a mass rental culture and a rental culture where rents are very expensive. As I said, I'm the middleman. I say that we regulate these investors, both kind of half keeping them and half banning them in an attempt to free up affordable housing for these middle to low income families. Some ideas I have for regulation are implementing credit lines for institutional investors, specifically for the acquisition of single family homes, requiring rent control for institutionally held properties, raising property tax when a property is vacant, implementing a priority system when a first-time home buyer is competing in a bidding war, basically allowing them a better chance of getting on the housing ladder, and setting limits to the amount of affordable housing an institution can own. These regulations attempt to provide both affordable rent and purchasing opportunities for these middle to low income households, while still allowing these institutions to have interest in the housing markets and an economical impact. Affordable housing shouldn't be a difficult thing to find, and nowadays it's a rare find. It shouldn't be considered a luxury. We must regulate these investors before they own too much of the housing stock, and we must act now.